Our next guest says that he's making sure to position himself for an M&A revival in the marketplace. So here to tell us why and which sectors you should be focused on right now is Brian Belski. He's Chief Investment Strategist at Oppenheimer Co. So M&A, it's hard to say it's going to rebound. It's just got to tick up a bit for it to look better than it did in 2009. Right. So tell me, what kind of M&A heat up are you looking for?
Well, we are overweight sectors like information technology, industrials, and healthcare, principally because that's where we believe the best fundamental outlook is, and we think that companies will try to go after those companies as well, just because of where cash flow levels are, valuation, and earnings growth. And we think it's going to be a situation where growth will be buying growth, cash will be buying cash. So we think as a sector basis, those three sectors are the best positioned, not only fundamentally, but for M&A cycles as well. What's interesting about M&A cycles, Margaret, is that typically and historically companies don't buy other companies when they should be buying companies, meaning when they're ultra cheap, like they have been in 08 and 09. When multiples start to expand and market cycles start to become much more bullish, like 98, 99, 2006, 2007, we had a lot of M&A where they should have been buying about the year before that, right? So we think over the next 12 to 24 months, we're going to see massive consolidation and a lot of M&A activity, specifically within those three sectors. So
you think all that cash is not going to be used for share buybacks, it's going to be used for other companies, other acquisitions?
What's interesting, couple points on that. We had a table in a chart actually in our piece today when we talked about share repurchases, pretty much dropped off last year in 2009. We think that's because many companies in the United States were in the bunker, so to speak, trying to garner as much cash as they could just in terms of investing in their own company. So I think there will be some share repurchase activity. There will be some dividend growth activity, which is also one of our primary themes for investing in 2010. However, we think given the war chest of cash, the largest amount of cash in the balance sheets in the U.S. since the 1950s, M&A is going to happen.
Wow, largest amount of cash on books since the 1950s, you
Correct.
say? Wow, so you're looking specifically at food companies as potential acquisition targets here.
Food companies within the consumer staples sector in particular, because free cash flow per share within consumer staples is one of the strongest sectors, number one. But from a pricing standpoint, food and beverages actually have negative PPI, so negative pricing. So they need to kind of get together in terms of the economies of scale to get bigger, to be able to afford stronger pricing going forward.
And it's interesting today with consumer spending up like 0.5 percentage point in the month previous. There's still that argument of how strong the consumer can truly be with the jobless rate, what it is. And we'll wait till Friday to get the latest read on that. But what's your argument here for potential consumer strength in 2010?
Well, a couple of things. Number one, discretionary consumer spending we think continues to rebound because the non-discretionary part of consumer spending has come off. What's non-discretionary consumer spending? Oil, gas, some foods. Commodity prices are actually down over the last couple of years relative to where they've been, so that's actually a plus. We do think that we're going to see a pullback in the price of oil as well because consumption is going to be lower, so that'll be a positive for consumers. But when it comes down to it, Margaret, it all comes back to jobs, right? And the actual unemployment rate is a lagging indicator. You have to look at the leading parts of the indicator, meaning weekly jobless claims, weekly wages, and temporary workers. From a longer-term perspective, those data points continue to recover. Now, last week we had a little bit of bad news on weekly jobless claims, but the longer-term trajectory is still positive.
Well, when you look in the tech space, you're looking at IT services and software as opportunities right now. What specifically are you looking there? When you say IT services, what do you mean?
When we're looking at peripheral type companies, not going to give any company names. In our report, actually, we list out 34 names that we think that you should go into, and we would reserve that to Oppenheimer clients. However, when you take a look at software in particular, is one of the very strongest subgroups within the technology space in terms of cash and just in the overall general buildup of cash.